Hello everyone, and welcome back to the monthly economic update for the month of August here on Economy.lk. Quite a few updates to get through, in particular on the domestic side. To start off, we did see a change in monetary policy from the central bank, where they moved from keeping a low interest rate environment or easing monetary policy to one of a tightening monetary policy, with them raising both the deposit rate and the lending rate, which are key tools on the policy framework, as well as raising the statutory reserve requirement, which banks have to keep as well. So both moves really enticing for interest rates to go higher, and we've seen a bit of that adjustment in the market since that change as well. Now this move comes in the backdrop of inflation, which has now reached kind of the upper bound limit of the 4 to 6% which the central bank was looking at. Inflation in the month of August for the Colombo Price Index moved to 6%. It's much higher in the national index as well. A lot of it has been driven by both food supply related issues, as well as higher fuel prices and other changes that have taken place in the prices of items as well. The other contributing factor towards this rise has been the rapid increase in credit to the private sector. Credit in the first half of 2021 has been much more than the credit given to the private sector in both 2019 and 2020. So clearly the low interest rate environment has really transpired into an acceleration of credit. So with both of these indicators heading in that direction, the central bank took this decision, and also with a view to curtail some of the pressure on the currency and increase the domestic interest rate, while putting a cap on the domestic, the international rate that you give for dollar deposits as well, enticing, reducing that arbitrage that existed as well. So some of these moves might ease a bit of the pressure that has been seen in the currency, in particular in August as well. Moving to some of the other key factors, I think one impact has been on the rupee has been the drop in international reserves. We did see it falling to about 2.8 billion by the end of July, and that was on the back of servicing the $1 billion ISB on the 27th of July. Some of the measures to get reserves back on higher footing have transpired, with the IMF providing close to about $800 million with the global increase in the special drawing rights allocation, as well as the inflows from the Bangladesh swap, as well as the China Development Bank loan as well. So a lot of these measures might see reserves coming back to above 4 billion, what it was prior to the ISB. And some of these measures would be really important to ease some of the pressure on the currency at this present point in time. On the global side, I think we're continuing to see the vaccination pace taking place. And this has also seen indicators like the WTO Global Trades Barometer also reaching new highs as well. Of course, some of this is reflection of the improved demand conditions, in particular in the developed economies, but also a reflection of issues related to shipping costs and things like that, which have risen as a result of the pandemic, as well as the increase in demand as well. And I think these are factors we'll have to continue to watch, because a lot of these costs do transpire into higher import costs, which in turn has an impact on the currency as well. So that's a quick roundup of the month of August, and I think as we get into the last 4 months of the year, it'll be interesting to see how some of these variables transpire, how Sri Lanka will be able to navigate some of the key economic challenges, both domestically and those coming from global sources. So stay tuned to Economy.lk for similar updates. Thank you.